2 years ago, Bitcoin was trading around $28,000. There was a lot of fear in the market around the rising interest rates, fear of recession due to inflation continuing to get out of control. However, fast forward to today, and it's a very different picture. We have tariffs that are on and off again, the flip-flopping from the crypto president. We have fears of war that continue to increase day after day. And on top of those fears, everyone's got to navigate their own daily lives with the cost of living crisis, rising house prices across the globe. It doesn't seem like these things are getting any less easier. However, the markets have continued to surge in the face of all of these fears. Time is running out for these bull markets, the bull markets for crypto, the bull markets for commodities, and the bull markets for real estate and the stock markets. And it's not an easy game to be trading around the highs. So today, let's have a look at what time is left in these markets and what that could mean over the coming years, what we can look out for and what we can do about it. Hit the like button, subscribe to the channel. Let's dive in. Now, the markets aren't all doom and gloom. There is potentially another solid upside, but the risks increase. Therefore, it's important that you are aware of those risks and you position yourself accordingly for the potential risks. One of those risks is obviously time running out. On top of that, towards the ends, we typically see the volatility increase. What does that mean? I talk about it a lot. Essentially, we're looking at the extreme movements of the market and, more importantly, the extreme movements of emotions, because the price might not change that much. But obviously in the last few weeks, we've seen it drop around 20%. But in the past, leading into this top in February of 2025, we saw extreme volatility in August of 2024, very, very extreme, up to a reading of 65. Yet the price didn't really go that far when you compare it to what's happened now. And when we look back on previous bull markets, or the entire bull market, and then back to the previous bull market as well, there is a bit of a characteristic here when it comes to the volatility index and towards these peaks. As we can see from the dot-com boom, you can see these peaks coming out on the volatility index. Basically, just a lot of fear in the market, yet it continues to climb. Now, you're getting quite a few washouts in the market, which can be part of distribution, and distribution doesn't have to only happen at the peak. You can see these pretty wild moves to the upside and then severe corrections. And over the course of the move to the upside, the volatility really didn't drop back under the 17 level. And these are two of the levels that I like to look for when it comes to a nice, safe looking bull market, or more to the point, a safe feeling bull market. In recent times, 2023, that didn't necessarily feel as safe to the majority. But when you look at the volatility, it was a very, very safe time for loading up positions. Whereas now we're finding the lows are getting higher, and overall the highs have been getting higher. If this trend continues, then it's unlikely that we'll drop back into the bull market zone. Basically, like a safe area for the market to continue to climb over the coming years. In terms of a time frame from the previous cycle, there was about 3 years from when the volatility started to spike out of 35 until it got to the peak. And then after that, it continued to spike out of 35 because you're into a pretty severe bear market into the 2022 low. So in terms of a time frame here, the first spikes we got were in August 2024. So take it roughly just short of 3 years out. That takes you into the first half of 2027. Now, this is the stock market that we're reviewing here, not the real estate cycle top, not the economic cycle top, and not the Bitcoin top. Just looking at the stock market here, the volatility index for the S&P 500 index. Now, take it with a grain of salt. It's just a time frame here. We haven't seen any breakdowns yet. Everything's hit where it needs to be, but I'll cover that in future videos. This video is mostly about time is running out and how to get things in order towards the end of the cycle. On the topic of the VIX, the data shows that over the coming weeks, there isn't a very good chance that this is just going to bounce out and give us a positive result. You've got the 1 week, the 2 weeks later after the VIX jumps above the figure that we just looked at there, 1 month, 2 months, and then things start to get a little bit more positive around 3, 6 months later and 12 months later. And I'll show this in terms of the cycle as well as we get into the second half of 2025. But if we just keep that in mind, It doesn't necessarily mean that this is going to be an easy ride out of this low. It seems like things have begun to break down, but that doesn't mean that this is the end and the top is already in. These patterns can take time to play out, and generally that is what happens around these peaks. So that's a look at the VIX and the volatility as we lead into the end of this cycle. Within bear markets, like we've just seen in 2022, it doesn't mean that there has to be a recession either. So if what we're seeing now continues on and we've got the 20% decline, it doesn't mean that the market has to have a recession. And what happened in 2022, 2023, and 2024, the failures from a lot of investors is that they were waiting for a recession. And through those periods on the chart, no recession happened. Although some people say there was a recession, there was no recession. And even if there was a recession, like we saw with the UK market and the German markets, they all put in new all-time highs while they were in technical recessions. So if you're waiting for this term to be published by the newspapers saying that there is a recession on, it might be too late by that point, and it could be too late to the downside, and it could be too late to the upside. So the problem that I see with that is waiting for the media or the governing bodies to say that we are in a recession is generally too late. The best thing to do is just focus on what the charts are telling us. And around those lows, well, it said it was probably a good time to be getting in. The risk was low and the reward seemed much greater. Whereas now we're getting further into the cycle and the time is running out. Therefore, there is some rewards to be had to the upside, but nothing like what we got back at the banking crisis in 2023 and 2022. This isn't all despair. There are still some positives to go. And I think as things start to improve over 2025, potentially even into 2026, this is a good time to start scaling out. Even through 2025, there's been a good time to start the scaling out process, because you just never know when the final bell is rung. There is no such thing as the bell being rung. Now, in regards to the tariffs, this is still one of the highest tariffs that we've seen in history, going all the way back to the 1930s. So, the topic, the narrative is looking at time is running out, but then what can this turn into? And I expect that this is going to turn into a much larger recession than what we've seen in the past. But as we get towards the peak, maybe a lot of people wouldn't expect the same sort of drawn out recession like 2008, or even further going back to something like the 1930s, because we've made it out of each of these terrible volatile periods throughout the last 15 years. Going back to the GFC, we made it out of it. 2015, we made it out of it. 2020, COVID, we made it out of it. 2022, the bear market, we made it out of it. And so that builds complacency in the minds of investors. So US effective tariff rate here is basically back at those levels of the 1930s. Now, on top of this, more and more info here. In the end stages of the 18-year cycle, or the end stages leading into the peak, generally you'll see the US dollar begin to fall. This started around 2020 and 2022, and as we talked about on the channel back then, this can take several years. What happened in 2000 and all the way into 2002 is it took several years for that top to form. In the last 24 hours, the US dollar has now hit the same price as nearly 2 years ago. So it's starting to get in contact with some of the lowest prices that we've seen in many years. And this is the mid-cycle. Now, I'll talk about this in terms of the cycle in just a sec, but just know that we are around both mid-cycle points. Tops have formed, and then the US dollar has come crashing down over the final stage into the peak. Then through the recession and through the low of the cycle forming, that's what happens with the US dollar. You get a nice grounding and consolidation before it's ready to resume its take on being a much, much stronger currency. But for now, it seems like time is running out. Trump is starting to break things with the uncertainty that he's causing with putting tariffs on and taking tariffs off. And we're seeing it in the charts. This is what the investors are telling us. That's the US dollar. The other thing is the yields here, the 10-year yields, they have spiked. So we're seeing higher yields, which might cause the Fed to have to increase rates rather than decrease them in the longer term. Sure, short term, meeting to meeting, maybe the May meeting in a month, they might drop it just to bring back some of the confidence. But what the charts are telling us in the 10-year yield here is that we've got interest rates increasing, and this is not a great sign for the markets either. The other thing is gold also increasing. Now, this has gone to a new, fresh, all-time high. But just before we all jump on the bandwagon and buy ourselves a ton of gold at new all-time high prices, one thing to note, and I'll go into it in further detail in future videos, but just as a high level here, we are beginning to see pretty significant spikes to the upside. We're seeing these spikes with gold while the stock market is hitting lows and potentially even turning point lows. These lows have now come back to exact 50% levels, which are generally a good area that you would expect a low to form. They've come back to some of the previous old highs on a long-term basis here on the monthly. And while that's going on, you're seeing a gold spike with an increase in the average true range, which means you're starting to see a lot more investors, whether that's retail, hedge funds, whatever it is, getting into the market, maybe towards some sort of corrective area. And I bring up the average true range now because we've seen this many, many times. It doesn't mean that gold has peaked and it's going to collapse, but often when you see these sorts of moves, just like we did back in, 2020, big moves to the upside after some significant increase in the range of the bar, this typically spells some sort of time that gold needs to cool off. It's just going to go through another process of consolidation. Now, does it happen at 3,200? Does it happen at 3,400, 35? I can't tell you, but what we are tracking is the average true range and the extent of these moves. How abnormal are these bars looking? Once you get these big moves, generally the market needs time to digest the move like it has done in 2020. You can take it back to the peak in 2011. That was while the 18-year cycle was bottoming. You see these big moves, average true range has increased. That's what it is down here. Basically, when you see these big bars, a lot more activity is happening. A lot of people are focused on that area. And eventually, you start to see it roll over to come back and fill in all of that price range. Same thing happened in 2006. Big moves to the upside, consolidated, took several months. This is around 500 days. I think that's about 16 months off the top of my head. Then the breakout, and we start to move higher again. So that's what I'm looking out for at the moment. Where this move ends, then we can start to measure what that correction could look like. But in terms of the time is running out, you can see that more people are interested in moving to a risk-off asset while there is a lot of fear and uncertainty in the markets. So the US stock markets here, if this happens to find some stability now as we lead into this final peak, time is running out, then that would make sense why you would start to see gold digest the move, go sideways for a period of time before it's ready to break out again, like it did something similar in 2006 before the stock market collapsed and the gold price got its first run up, also collapsed, but then started to run up again. So if you're seeing a slowing here for gold, maybe you're going to start to see a bit of a move higher for the stock market. But I think this could take quite some time, as we looked at with our cycle theory here, looking at the S&P 500 curves going back 10 and 20 years. This doesn't mean that we just go straight up into June. Overall, I'm really just interested in what happens in June. That's at least what the cycles are telling us before we go on another attempt at higher prices. Pretty severe drops looking around August. We'll look at that once the time comes. It doesn't look like it's going to be an easy year, especially after these 20% drops. Of course, nothing is guaranteed. I'm just looking at the probabilities, and I'd rather be prepared for that sort of event going forward in 2025 in case we do see something like that attempting to break out and it takes until the end of the year. At least we're not surprised that this is the sort of thing that's happened many times before. This is 2015. Market still went up after that, but time was ticking. There was another big drop in 2018 and 2020. And then 2005, you had this area here. It was a bit of uncertainty. Market continued up into the peak. Then you had that big drop as well. Now, what does all that mean for Bitcoin? We're looking at the cycles going from the low to the highs and the lows to the lows, avoiding the halving cycle, because many already know about this halving cycle and it's not going to work out year after year. But in terms of time frames to the upside, we can have a bit of a roadmap from what previous cycles have done. In this case, we're at 880 odd days from the low, from the absolute cycle low. And it's a similar sort of theory that I would use when it comes to the crypto fear and greed index. There's a period of time that people can remain bullish and a period of time that they remain bearish until things flip. And generally we've seen roughly a 1 year period that they can remain very, very bearish on the market before things flip. And at the moment, we're still, for now, in that bullish period to the upside. So about 880 days, coming up to around 900 days. Generally, like we've seen in the past, these cycles have gone about 1100 days to the upside. Now, 1100 days takes us out to October, November of 2025. That'll give us about 200 days to go. 200 days, 6-ish or so months, 6 to 7 months. What were these cycles doing previously? 6 to 7 months out from the top, 2021 was going on a correction, coming towards the end of the correction, but that second rally was quite weak. 2017, it was in a correction, a very quick correction, and that final rally was very fast, and it was huge gains. Now I want to look at some of the price targets as well, but covering off what we're looking at with the timeframes here, going back to the first cycle, the Genesis cycle, there was a correction coming up and then a final run to the top, and that run didn't last very long at all. Big gains as well, but you still had that correction towards the end. In terms of swings, there were roughly 5 to 6 monthly swings as well. Here is one. We're looking at the lows to the highs. There's the highs, more highs. So basically 1, 2, 3, 4, 5, 6, with a couple of minor swings in them. Now 2017, 1, 2, 3, 4, 5, 6. 2021, 1, 2, 3, 4, 5. And we find ourselves now in the 2025 top with 1, 2, 3, 4, 5. So we could be up for another one here, and that would potentially lead us into the top. The question everyone always asks is, what could that price be? When is this top going to come in? Roughly what price? And I've got a few juicy price targets here. For many, I don't think this is going to be bullish enough for them, but in this cycle, we haven't seen the big pump moves that we've seen in the past. We've seen two $60,000 moves, almost to the dollar, which is pretty incredible when you consider that this has gone even more global, yet the markets tend to repeat things time and time again. The first move out of the low at 15K to the top at 74, roughly about $58,000. The next move from the next significant low, like we saw in August of 2024 to the current peak, $60,001. Now that happened in roughly half the time that what it took in the first instance. So keep that in mind. If things do start to explode, let's have a look at where $60,000 takes the market from the current low, if in fact this is the low itself. Well, that's what we've got to work with. 60K takes us somewhere around $130,000. And so time is running out. Get yourself in order, get your life in order, get the plans in order. This doesn't mean that this is all it has to do. I've got some price targets further up, but talking about the end of cycles, risk and reward, what do you want to do with your portfolios? If you've been in here for a while, maybe even from the earlier cycles, and you're looking at some, the price now, you're potentially up thousands of a percent. If you got in 2023, like we were looking at on the channel, maybe you're up a few 100%. But if you're getting in now, this is the time where you really need to have those stops in play. Because from this price up to the 130s, the 120s, the 150s, the 160s, as I'll show in just a sec, the game is really becoming quite finite. So it doesn't mean that you can't make money from it, but the returns are obviously getting slimmer on the way up. Even with those $60,000 moves, this last one here was 120%, but obviously from the 15K low, you're up 376%. And for the entire move, low to high, somewhere around 600%. So it is possible that the market does some pretty significant gains like it did in 2017. There were still some pretty big moves from July into that top, 1,000%. It's not necessarily the game has changed now. There is just a lot more eyeballs on it, and you need a lot more money going into it to get to those prices. So it's all possible, but it depends on whether you want to risk it for that particular biscuit. Now let's bring out some of the fibs, and I'm using full ranges here. So this one here is the largest range projected off the current low. If this low changes, then we have to readjust the target itself. But this is the information we have for now. That's why I'm going to use this. So I'm looking at roughly around 120,000 right here, which is the 50% of this range projected off the low. Generally, like we've talked about many times on the channel, there can be failures at 50%. Some cases you get support, other cases you get failure, but it's a really good point that the market likes to get attracted to, and then you can decide whether, or the market will decide whether it's strong or weak. You get a failure on a long side, that's going to be weakness. If you get a breakout, that's going to be strength, and you can look to the next target. So the next target is a 100% move of this entire range. So this is way up on the hopium end, and I'll start to bring it down. You're looking at around $166,000, $168,000. Now, the other level I've got here is the fib level. So this is the entire range. You got 50% through the middle, and then this range projected up 61.8%. Another interesting fib brings you out at 167,000, which clusters with the 100% being 168. So some really close, tight numbers there, and that's what you want to look for when it comes to price targets and projecting these out in the case of probabilities. Just picking a number somewhere in the middle that doesn't necessarily have any targets just means it has lower probabilities. It can make it there, but there's just less chance because you've got a few more resistance levels to break through, just like brick walls. So let's have a look at the next one here. And the next fib, if I turn this one off, the next fib is the current range that we're working with, the low August to the top in January. Do note this on a 3-month chart, which is why you will see just fewer bars here. So those targets, again, 150% around 164, so somewhere in those mid 60s, but closer to the money, you're at 104, with the tops being 108, 109. So there's a bit of work to do to get through these tops, which I think most people would expect, especially with the double tops potentially coming up if you get the market moving up. The 100% takes you out at 134. So let's turn that one off and turn the last one on. Now this one is the entire, the first range out projected off the August low, which happened to call the all-time high so far. The top was 107, the 100% was 107, and we saw the top at 108 and then 109. So we know this particular tool has been working. The next level above is at around 136. So we've seen one of those numbers already, around 134. With the next range here, and then if we start to layer on the rest of the ranges that we have, you start to see where these clusters come out. And I'll throw on the last one here, the fibs. And we're looking at a lot of clusters around the mid 160s for the hopium end, then coming down somewhere around the 130s. I think we've got to always look at the 120 as well. That's been on people's minds. And then all the way back here at 104, 107, and the current tops at around 108, 109. So there's a lot of work to do once it gets back to that level, and I think that's going to be where the fear comes into the market, depending on how much longer we have in the cycle. So looking at time to go, time is running out. If this happens relatively soon, we have more time left, therefore we might have a bit more energy in the game to get to those next levels, the 130s and the 160s. If this drags out for a period of time, you'd expect that there might not be that much time to go. It could do it, but it's got to do it in a big boom. And who knows? Maybe Trump does something, everyone loves it, and it does boom into the end of the cycle, and then we get the effect of it pretty much pumping up and dumping straight back down, something like 2017. There was a huge pump up, and the next month basically just reversed the entire move. So there's lots of scenarios that could happen. We've got a few on the roadmaps here. This is all part of the 18-year cycle. This is Bitcoin's first time in an 18-year real estate cycle, real estate and economic cycle. And so we just don't have the data going back to previous cycles to see how Bitcoin has performed. What we have seen on the short to medium term is that gold has been performing as a risk-off asset. Bitcoin has been somewhere in between those. It has been holding up okay, but it hasn't been pumping like gold. Maybe that comes next. But I'm not throwing anything out here because we just don't have the data from previous cycles. But what we do have is hundreds of years showing us that we are coming towards the end of a cycle peak. At the moment, it seems that's a very sure chance that, things could be topping. Maybe it has topped already. Maybe it does top in 2026. But potentially as we get into that top, it's going to look like this is wrong and that things can keep going on much longer than many have anticipated. But I think we are in for some sort of significant move here. And for members, you guys have your premium courses to have a look at and how to start planning for that. I hope this has helped you guys go through your own portfolios in a time where there is just a lot of uncertainty. And this is a good time to reflect on what you would want should we see higher prices again. Could be a good time to start to capture some of those gains. So that's it. TIA Premium, link in the video description. You can check out all of the course content there, and of course the Discord. We discuss trading in there as well. Subscribe to the channel, like the video, and also go and subscribe to Michael's channel as well. He talks a lot more about trading on the short term. Thanks again. Have a great weekend, and I'll see you guys at the next video. Cheers.